So, welcome everyone out there in the digital world. Dusty with Florida Building Inspection Group, and we are on Ask a Pro. And with me today, I'm super excited to have my good friend Jim Gaffney with Union Home Mortgage. And we're super excited to hear from Jim today. How are you?
Doing good. Thanks for having me. Appreciate it. Thank you.
Absolutely. So, we are going to talk about a couple of subject matters today. One of them is what changes have happened to Hometown Hero, which is good for everybody. And then we're going to talk about creating affordability for both that will benefit both your seller and your buyer. So, Jim, we're going to start off at the very beginning. So, what changes have happened to Hometown Heroes? Well, first of all, let's start out with what is Hometown Hero and how did it originate?
Yeah, great question. So, Florida State has put into effect a pool of funds to subsidize or to assist home buyers with gaining access to home ownership. Right, affordability has been a little bit out of reach lately. Inflation's kind of gone a little bit crazy. So they're kind of stepping in and saying we have this money to help people buy a home. So someone can have a job, they can have good credit. They can have good income, but like to just really capture that down payment, closing cost money, it just takes a lot. So a lot of people qualify for home ownership, but they just don't have the money. And this is a pool of money set aside for this segment of people to help create home ownership and to essentially pay for or fund your down payment, and for the most part, the majority of your closing costs. Traditionally,
Okay.
the
So,
Hometown
let me
Heroes
ask
was
you a question. Let me ask you a question. I'm just going to interrupt you. How much should someone who wants to buy a home or look at buying a home, like what kind of percentage? We talking 5,000, 10,000? Like how much should they actually have if they were really serious about becoming a buyer?
Yeah, I mean, it's kind of a loaded question because, based on affordability, right? So depend how much you want your payment to be. So the least amount that you put down, that you invest in the home, the higher your monthly payment. So I'll just share the minimum, which is, for conventional, the minimum down payment is 3%. So, and an FHA loan is 3.5% of the sales price. So what that means is on a $300,000 home, if you're a conventional buyer, your minimum down payment is going to be $9,000, 3% of the sales price. So $9,000 is your minimum contribution to get into the home. And that kind of goes against for those of us a little bit more seasoned in age, in the 80s and 90s, there was this stigma of like you had to put 20% down to get a home. And today it's just the opposite. You can actually get into a home with as little as 3% invested or 3.5% FHA.
Okay. Well, thanks. That's a great example. That helps me to understand and our viewers to understand how you look at down payment. So, Hometown Heroes was created to help with that, correct?
100%. It was originally designated for specific groups, what they would consider the first responder segment, which is your firefighters, teachers, nurses, police officers, medical professionals, medical field workers, going right through chiropractors, veterinarians. So those specific trades associated with the eligibility for this assistance. As of, I want to say as of today, but as of July 1st, but effectively July 3rd, due to the weekend. But effective July 1st, that that income or that occupation requirement has been lifted to where there's no occupation requirement. So what was the police officer, the fireman, those benefits for home ownership being applied to those individuals, those career individuals, are now open to everybody, which is a
Oh,
pretty big announcement. So basically, anybody can qualify. You no longer have to be a dental hygienist or fit into a specific career niche. And
so
that's
remember
a
you
lot of people. It's a lot of people it can help.
It is a lot of people. So remember, you heard it here first on Ask a Pro. So we want to deliver good value to you. So thank you for sharing that. So why the change? I'm just curious. Do you have any idea what made them
Yeah, I mean,
lighten the requirements?
yeah, I mean, there's some political activity behind that related to serving economic communities and potential discrimination against certain segments. So to say that, like, we can provide affordability to somebody who has this job, but not somebody who has this job, there's a little bit of unfairness to that in some way, shape, or form. So that had some to do with it. But the good news is they have a $380 million pledge to kind of fuel this fire here. And they do run out of money on occasion. Like right now, they're not taking locks on Hometown Heroes, but they do run out of money. So, my encouragement is, when things like this come about, definitely take advantage of them, because just like in life, really nothing's forever. These down payment assistance programs, once funded, once political arenas maybe switch office, governing bodies, etc., within the state of Florida may change this type of funding, because obviously money has to come from somewhere. So debits and credits, right? So they're taking money from somebody and giving it to somebody else. That requires an approval. So my encouragement is take action if you're interested in buying a home. We have a client who's interested in buying a home. And there's a few parameters that are different, Dusty, than what was the case. If I could just share those for just a minute. The big question is what's changed. So it's actually up to $35,000 in assistance. It was previously up to $25,000 in assistance. The consumer has to work a full-time job. Full-time in the eyes of the Florida Housing Authority is 35 hours a week. So you have to work 35 hours a week for a company who has a physical location in Florida. That's really important. So if you're working remotely, there's some caveats there to having a entity, working for an entity that doesn't have a physical space in the state of Florida. So that's important. The income limitations, there's been, some differences in prior housing authority assistance, where there's some different income limits based on dependents. In this case, in our county, at least, it's $130,350 as the maximum income limit. So if you're making over $130,000, you're not going to be eligible for this program.
Is that combined household income?
Yes.
Or is that okay?
Yeah, there's actually two parts to it. There's a piece where it's combined household income, and then there's another part to it that uses just the application income, meaning just the individual who's on the application, but not who's in the household. So that's something where you want to go deeper with your lender as to the details within those two different types of bond programs. One's called TBA, one's called bond, but they have different rates and different structures as far as whose income is eligible and whose isn't. The good news is you can have a non-occupant co-signer, and their income will not be calculated in one of these programs. So you can actually have a co-signer and they don't use their income. Another really cool thing is that if you're VA, if you're a veteran, active duty military or veteran, you're exempt from the first-time homebuyer status. So remember, this is a product for first-time homebuyers, defined as not having owned a home in 3 years, in the past 3 years. If you're a veteran, you could have owned a home as close as recent as yesterday, and you're still eligible for this program. So as a veteran, you don't have to meet this requirement. Pretty much the basics. Yeah, it's pretty much the basics of that program. It caps up to 5% of the sales price. So we want to, up to the loan amount. So, we want to be aware that although it's up to $35,000, that would really take buying a $700,000 loan to max out your eligibility. Gotcha. So up to 5%, and that's going to cover your down payment for 3%. Then you have about 2% left over for closing costs. That's a really good head start on the closing costs.
Okay, so let me ask you this. So I know some programs like this have to be paid back, some do not. How is that treated at time of sale? Or do you have to stay in the house for so many years? How is that actually treated and perceived for that?
Yeah, and that's a great question, which is what's the catch, right? How do you get $20,000 and how do you pay that back? So the answer is kind of simple. So there's no zero monthly repayment obligation to this. So you're not physically obligated to make a monthly repayment for this debt. And I say this debt, meaning this Hometown Heroes pledge gets assigned to your home as a second lien, just like a second mortgage. Consider it like a second mortgage. So that second mortgage indebtedness is tied to your home and has to be paid off at some point. And that could be whether you sell the home, it's going to be combined with your payoff. If you refinance your home, if you stay in the home through its maturity, through its, like, let's say it's 30-year amortization, and you go through the maturity of the 30-year term, at the maturity of those 30 years, that amount will be due in full. And there's some models to start prepaying that earlier if you plan on staying in that home 30 years. So the answer to this is a loan that is not forgivable. It does get paid back. However, there is no monthly payment. And the message is that if you do plan on staying in your home, you're building equity over time. Eventually, you'll have the equity in your home to pay this off in the event that you need to refinance or to sell your home.
Correct. Very good. So is there anything else that you want to say on the Hometown Heroes platform? Is there anything that I didn't ask?
No, I mean, no, those were great questions, and just the details of the program, I think we explained. I would just send one message to consumers or even like real estate agents that are listening to this. Like, you can actually create a home buyer yourself with this program. So there's a lot of people who don't know about this. The average consumer is really only seeing a little blurb on maybe like a website or on social media. They're not really digesting it. They can go from renting to owning a home with very little money, in some cases almost no money out of pocket, when we talk about access to assistance for veterans and things like that. But they can buy a home with very little money out of pocket. So the message is that, you know, you can actually create a home buyer in a client, you know, or a friend, and allow somebody who's renting to be informed that there is this system out there, this opportunity for them to go buy a home and have the down payment paid for by a third party. So that's, I think, the message of the whole program is that home ownership exists. And I think under $130,000 of income, that's a really wide range of home buyers that can move from being a renter to a homeowner and not have to have that savings of $10,000 or $15,000 prepared, but who are still responsible people with their income and their credit and their ability to repay a debt. This is a great opportunity for that person.
Yeah. And I can honestly tell you, rent today, honestly, I mean, if you're renting, maybe you should stop for a minute and hear what Jim's saying. Give him a call, chat with him, and really let him help you understand the program and how it can benefit you. When you're paying $2,500 rent and you could be paying $2,500 on a mortgage, you're better taking that money and making it work for you than handing it to the person that owns the property, right? So
Exactly.
really great opportunity for home ownership. And how do I find that that magical $20,000 that I need to be able to get into the home? Jim has your answer, right?
Yep.
So thank you for that. And then you wanted to talk a little bit about creating affordability for a seller and a buyer. So go ahead.
Yeah, we can just touch on this briefly, and this has been talked about and explained. But in short, interest rates have risen, right, over the past 9 months, I guess at this point, so 8 or 9 months. So you have a rising rate environment. There are some homeowners that are sitting on the sidelines waiting for rates to come down, and there's some conversations around that we'll pass on. But waiting for greener pastures in an environment, not to mention a state where there's more people than there are houses. So that supply demand ratio is continuously pushing prices, is pushing home prices in the upward direction, albeit slower, but they're still going up. So the point is that people want to buy. Some of them have a fear around cost and affordability. And it's funny, the NAR and Florida Realtors group, FloridaRealtors.org, just put out some data that about 96.5% of homes sold last month were sold at a price below the list price, which means that we have a list price and then we have a sales price. There's a consistency that homes are selling a little bit below the list price, which means that there's opportunity for the sellers to keep their list prices and incorporate a seller credit. And the importance of a seller credit can create affordability to a buyer by giving them money to pay their closing costs. They can use it to pay out or buy out their PMI. I mean, a seller can actually market a home and saying the seller is willing to pay to buy out your PMI if you have a lower down payment. They can use it as a temporary discount to do what we call like a 2-1 or a 3-2-1 buy down, where they can get a lower rate for the first 1 or 2 or 3 years, or they could use it to discount their interest rate permanently. So I'm just touching the surface, but the message is that sellers have an opportunity to use the list price, the original list price, as a tool to negotiate, include a seller credit within the body of their sales price, rather than listing the home, waiting until day 64, doing a price reduction.
Yep.
A consumer, Dusty, would much rather have a lower payment by $300 a month, because you're giving them money. They'd rather pay a little bit more for the home, knowing that they're going to have a lower payment. And that's just a message that needs to get out now more than ever to sellers and to buyers. Buyers who are making offers, especially homes that are on the market that are dated. Don't be shy to make an offer inclusive of a seller concession, or find an opportunity where there's a potential seller concession that can help fund your closing costs and lower your payment. And so it's a benefit to you, keeps you in your price range, where home prices and home combined with interest rates have created less affordability. This is a way of reeling that back in. And again, for sellers, you're expanding your buyer pool and potentially even increasing more traffic to your home because of that incentive.
Gotcha. So I love it. So seller concessions used to be something that we used in the industry years ago. Am I correct? This is not a new concept.
Yeah, we've been using them forever. And here's a model that's, we used to just use them for closing costs for people who didn't have the money for closing costs. Because, to be honest, a lot of people, like going back to the hometown heroes, a lot of people have income, they have good credit, job security. A lot of people just don't have $20,000 in their front pocket to put into the closing costs and the down payment. So when a seller can alleviate that ask of like, where's my money going to come from to pay for my closing costs, when they can essentially fund that through the seller concession, that's just bridged the people who had, let's say, $10,000 in savings, but not 20,000. Well, if the seller is giving them 10, well, that buyer now they're going to get off the fence and they're going to move forward because somebody has just bridged their pain point. Their pain point was they don't have enough money, and now they do have enough money. So really valuable seller concessions to use towards these other items, like buying down the interest rate, paying off the PMI, temporarily buying down the rate. That'll give you a really low rate when you do a temporary buy down, and really create some breathing room for the next year or two to allow for the market to correct, for allow to inflation to curb, for interest rates to come down, which the top economic indicators, forecasters in the country all predict interest rates in the high 4s, low 5s, sometime in mid to late 2024. And that's not my data. That's coming from CoreLogic and Redfin and Altos and Fred, and all the who's who in economic forecasting are all anticipating that, including NAR and MBA. So point is, a lot of opportunity in creating seller credits.
So if you are a potential buyer sitting there waiting for things to change, I think what you need to change is you need to talk to the right people, right? You can listen to all the doom and gloom that's going on in the media, and I can tell you the picture that's being painted is a picture of a national real estate market, not what's happening here in the state of Florida at all. State of Florida really has been pretty consistent. So Jim's right about the fact that our list price the numbers are coming in a little bit less than what we're listing them at. So you're seeing a stabilization there. But I mean, tell me if you would agree. I think that the big thing really is you have to have a local representative, mortgage, um, agent, and you have to be able to reach out and touch them. This business has always been about a personal one-to-one relationship. It's not changed. I don't care how much digital opportunity there is out there. You can do all the homework you want, but when it comes down to it, you need to get pre-approved, right, Jim?
Absolutely. Yeah,
Right?
the locality matters, and it's not uncommon for us to get phone calls from people who have been pre-approved with other lenders that are out of state or online entities, and they just don't know about hometown heroes. They don't know
They
about
don't.
structuring affordability through seller concession. They don't know about the flood insurance that takes place in our market, and the homestead exemption and portability exemption, all these things that create affordability and convenience to a consumer. They just don't know that. And it's
Yep.
not anything against them. They're just not here. So someone calls me to finance their home in Las Vegas. It's just not my thing. I don't know
Gotcha.
about taxes in that state. So you nailed it on the head, where the biggest piece to come out of this conversation is working with people that you trust, and someone who can educate you on what's available for you, for your individual need. And that Florida is not the rest of the country. We're not,
It is.
Toledo, Ohio, or St. Louis, or we have people. We have over 320,000 people, new people, documented new people came to Florida last year, which is the highest in the nation. So we're a different animal when it comes to home ownership and the drive for home ownership. Interest rates have curbed the economy some, but we're in Florida. People are buying homes, and I know a lot of real estate agents that are just slammed with business and slammed with activity, because it's still a great time to buy. And even investors are still out there recognizing that this is still a great time to buy, and also thinking that, Dusty, if rates do go down to 4.5%, I mean, what's going to happen? Is It's going to be a line of
Going to get
people.
even crazier, and we're going to be even busier now.
Yeah,
I
so
know
you're
that's
going to
not
go
where
back
you were
to
going.
you go back to open houses with 20 people in the lobby because they've been waiting the year for the better days. Now that home that was selling at 400 has this demand. They say, well, wait a minute, we have all these people. They're willing to pay more money for the home, and there you have rising home prices. So it's actually a really good time to buy. The refinance opportunity will always be there down the road and right itself. You
Yep.
can file for your tax exemptions and do all the things you need to do to get your payment and rate lower in due time. But today's still a great time to buy.
I agree. So, Jim, is there anything else right now that's pressing on your mind that you really want to share with the audience?
No, I think just the message of preparedness, the message of preparedness. And what you don't want to do is start your home search without starting your financing search, because there's a message: no money, no house. I have my book right here. Was that right there?
Yep.
Just republished another book, actually. No money, no house. And prepare financing, whether you want to buy a home now or in 3 years. Speak with a financial professional. Get prepared, because if opportunity comes up on short notice and it's a good opportunity, you're probably not going to be the only one interested. And how great would it be to have a running pre-approval just ready for you, whether it's next month or next year? Then on very short notice, you can call your real estate partner and you can call your lender and say, I think we found a house, and you're ready to go. So
Very good.
my last message is just be prepared, have your finances in order, know what your credit looks like, and speak to a pro. Definitely partner with a real estate agent who is working and who is in service. And just because they're your friend or your relative doesn't mean that they know the local market the way they should, and that they have a strong network. So reach out to a strong real estate partner, get with a lender who knows what they're doing, and get educated about what's available for your home ownership goals.
I couldn't agree with you more. There's plenty of opportunity between the seller concessions and the hometown hero that is now opened to many more people than what it was originally intended for. You just have to work with the people who are knowledgeable in the industry, and that is going to be your local contacts, your local agents, your local mortgage brokers that you're going to run into in the grocery store, that you're going to see at the baseball field with your kids. That's who you want to work with. So thank you, Jim, for joining me today. We will be back next week, and I have I have Lindsay from Florida Best Quote coming on, and we're going to talk insurance, guys. We all know rates are going up, but there's some good news at the end of the day. There are some corrections being made. So join us next week at noon, and we will be talking to Lindsay O'Donnell from Florida Best Quote. Thanks so much, Jim. Have a great day.
Thanks for having me, Dusty. Thank you, FBI. Thank you.
You're welcome.